Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month lead and tin.
LME 3-month lead. This market has had a decline since the market failed to achieve the bullish potentials of the two ascending triangle patterns and two reverse head and shoulders bottoms seen earlier this year. We have seen instead a decline down through the 50% Fibonacci lines at 22.25, 21.39 and 21.34, plus below all the moving averages. Prices fell down as far as the January 2020 high at 20.39 late the week before last, and on Monday of last week. Before that Monday then saw a combined key reversal up and bullish engulfing pattern that drove prices back up. Now, last week I did say, and I quote, "There is the possibility that the action since mid-September to date could be a bear channel," and that's currently between 1984 to 2106. However, it is early days on this idea of a bear channel, which is why I have not highlighted it. But that doesn't take away from the pattern being there, end of quote. Now, I further added, and I quote, "Only if we see the market stabilize at this January 2020 high at 2039, as it did back in early July, only then can we see prices possibly using this bear channel to move or even vault into the next pattern." And that's the end of the quote. Since then, prices have indeed stabilized and have even tried higher, up towards the slowly declining long moving average overhead, currently at 21.24. However, including today, two things may be happening. Firstly, the upper trend line of the bear channel, currently at 2106, has been breached. Though as yet it still remains unbroken, though it would very much depend on the closing levels over the next few days as to whether this statement remains true. Secondly, does this breach of the upper trend line, does it indicate a possible new pattern in the offing? I am not sure on this last point, and I am not sure as yet if we do have another pattern, what this pattern could be. I've even taken a look at the longer term charts to seek inspiration. I have not found anything there. I just suspect the upper bear channel line is just not that strong a resistance. This market requires some further pondering on my part. LME 3-month tin. The most obvious feature had been the late October 2022 to mid-March 2023 bullish shift pitchfork, which is highlighted in dark blue on my daily chart. I drew this back at the end of April, just as we were going into May, and it gave the main bullish angle of attack of this market until mid-August. Back then the market punched down through the lower time, currently at 28.265, as well as all the moving averages. Interestingly, these moving averages have slowed earlier temps lower, such that we even seemed to form a possible halfway hesitation with the action since late July until the start of October. It was at the start of October that it really looked like we might have a decent second leg to the halfway hesitation lower, but prices ran into two significant supports and for the moment have turned back up from them both. The first is an obvious one. It is a series of congestion bands below, specifically between 23.850 to 24.155 and between 22.895 to 23.555. I have highlighted these before. The second is a newer, less obvious one, but one that needs to be considered, even if it is not a perfect example of one. It is a June to October potential head and shoulders pattern, with the neckline highlighted on my daily chart in bright red, and that's currently at 23.405. As I've already said, this is by no means a great looking pattern, with the second shoulder having quite an extension on it, but it's still worth considering. These two supports push prices higher, up over the first overhead resistance from the 50% Fibonacci line of October 2022 to February 2023 move at 25.020, but so far has done so cautiously. The real test overhead will be the congestion from September and August, based around the 25.850 area. Plus, and so far, this resistance has capped this market, and that's the declining short medium moving average that's nearby, currently 25.475. Above these we have the unusual feature of the consistently flatlining moving averages of the long moving average currently at 26,215 and the medium moving average currently 26,400. Thus we can see that the market seems right now to be caught within a rather wide range with significant resistances overhead and significant supports below. Attempts last week to try and push the envelope have so far failed. But the pressure from the declining short medium moving average as it moves away from the 25,850 resistance could be seen as being less than these two bearish pressures when they are combined, and it may be ripe for another test, and soon. Meanwhile, the congestion support below, well, that remains consistent.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.